Hello, everybody. I hope you guys can hear me. Thanks so much for joining me this evening. My name is Christina Moss, and you are watching my very first episode of The Bottom Line. And so I decided to create this kind of impromptu, very informal gathering so that we can talk about business, finances, and entrepreneurship and family and how all of that stuff works together. And so, let me do introductions first. My name is Christina Moss Robinson, and I am the proud owner of Moss Financials, what I would like to call a boutique accounting services firm. And we help small service based businesses with their numbers, their accounting, their bookkeeping, their analytics, their budgeting, goals, cash flow, all of that good stuff, payroll, QuickBooks setup, we do it all. So I thought this would be a great opportunity for me to number one come out of my shell a little bit, so you guys can know a little bit about who I am. Um, it's something that has been God's been pushing me forward for the last year, saying, "Hey, be seen, come out of hiding," and so here I am. So. The first topic that we're going to talk about today is cash flow woes. And this is very near and dear to my heart for a number of reasons. Number one, I just had some issues with some cash flows just last week. Okay. So, yes, I am an accountant. I have been an accountant for just about 20 years now. This is actually my 20th year, but I haven't been a business owner my whole life. So, those things that I know about running a business, being in the business versus just doing someone else's numbers is completely different. And so as I'm learning these things, I'm wanting to share them with you guys. So I have my notes over here. So if I look over here, it's the reason why I'm like 40 plus. So I can't always remember all the things that I want to talk about. So let's talk about cash flow. What is cash flow? So what happens is that I talk to a lot of clients and just people in general, and they are trying to understand, okay, well, what's the difference between like cash flow and like revenue? I sent an invoice out, and that invoice was $2,000. Okay, well that's really good. Kudos to you. But did $2,000 flow through to your bank, or did they make four payments of whatever? Math is not my strong suit, so bear with me. So you get this $2,000 invoice, and you've given them, five opportunities to pay it. You're not getting $2,000 right then and there, and so that is part of our cash flow. It's like money comes in and then money goes out. So you can see it's interrelated with revenue, but they're not a one-to-one direct connection. And so what happens, especially in this pandemic, and again, it's this is such an important topic right now, because what's happened is that a lot of these businesses, uh, they had to shut down, they lost clients, they lost a whole bunch of things. And so when they lose those things, of course, then cash stops flowing through. And so a lot of these businesses have a surplus of cash and say, well, we can still kind of operate and run because we have cash. And then when the cash runs out, the cash runs out. So, what do you do about that? There are a number of things, and I'm going to actually explain to you what happened to me last month that even prompted this whole conversation. So, as you guys are getting into the room, please, I'm going to see if I can change it so I can see some comments. Please send your comments and we'll talk about it. We'll have a discussion about it. So as you guys are coming in again, just comment, say, hey, let me know where you are. We're going to be talking about cash flow woes. So last month, I'm just kind of giving an example of what's going on. Most of my clients is on an auto bill. So at a certain day of the month, I automatically charge whatever card that I have on file for them. And then that's how I get paid. Well, that's not how it was in the beginning. Okay. In the beginning, it's just like, here's the invoice, pay me in, 7 days or 15 days. I actually had some terms there. And then as the business grew, I'm thinking, okay, well, I don't really have time to do that. So I'm just going to have my client sign something when they sign the agreement. saying, hey, you can deduct, XYZ amount of dollars each month from the card that I give you, and then that's how you pay your fee. That is perfectly fine. However, I did not change that for everyone. And so what happened last month is that, yeah, I had all these different invoices out and I had income. I had several clients that did not pay me either because they were not on that auto bill system because I didn't retroactively do it. The ones that were not on this new system, I'm like, I'll just continue to take a check from them or continue to have them pay me on normal terms. That didn't work out so well. So what happened is that I'm looking at cash and I'm going, oh crap, I don't have any cash. Why? Because I had one customer who was paying me through her bill pay, and she sends it to her bank, and then the bank cuts a check, and then the bank sends me the check. Well, it's like Christmas season, and unfortunately, the postal service is like, we'll get to your mail when we get to it, or we'll throw it away, whatever. And so I didn't get the check. And then I had another client who, unfortunately, which is it's going to segue into something completely different. Um, he has a debit card on file that's attached to his business bank account. Well, at that point in time, the bank account was negative, and so my payment bounced. And so already that's $1,000 of cash that I did not see. Perfect. So what do you do when you have all these cash flow woes? That was huge for me. And I'm like, oh my God, I got a business to run. I got expenses to pay. And regardless of whether I received revenue for that day, I don't have no cash. And cash is king. Let's remember that. So what did I do? Man, oh man, oh man. So first of all, I'm thinking, okay, well, I got to collect. I got to figure out what's going on with my clients. Why is this account overdrawn? And where is this check? So I contacted the first client and I said, hey, I didn't receive the check. Um, can you go in there and have them send something else? And so she's like, oh, let me go check the bank. And so I'm waiting for that. Meanwhile, I'm speaking to a friend of mine and she says, this is your business. So if you want everyone from here on out to give you a credit card and put on file, then that is what you tell them to do. I said, you know what? You're right. So that's what I did. I said, you know what? Don't worry about the bank. This is my new procedure. And so if you can just give me a credit card, I can put it on file and every, seventh of the month, you don't have to worry about the bank. You don't have to worry about doing anything additional. My credit card processor will process your payment on the 7th. I'll get the money on the 8th on my bank account. We're good. Excuse me. She was fine with that. Perfect. The other client, I go, well, okay, so I'm calling. What happened this month? And so that kind of segue us into the reason why we're even having this conversation is cash flow. So this particular client, we're always talking. Don't use your bank account, your business bank account, just all willy nilly. It's really not your money per se. It's really kind of the business's money, and we don't want to commingle funds. So, and we'll talk about commingle funds in another episode. But when he goes out, he's pulling his debit card, his business debit card for food, and he's cash apping folks, and he's buying all of this other stuff that has nothing to do with the business that I can't track. And so I don't know how much money he's making because half of this money that he's spending is not for business. And so what happens is at the end of the year, his cash flow is negative, which is why my check bounced or my payment bounced. But he also didn't have enough money to pay his actual expenses, his sales tax liability. And this is money that when he charges a service, he has to take sales tax from his clients, and then he holds that into a little bucket, and then he remits that to the state. Well, if you are not tracking your cash flow, you spend all that money, including the money that's not yours, because the sales tax is not your money to keep. It has to be remitted to the state, and so now he's past doing the sales tax liability, only because we were not looking closely at cash. So just be really, really very mindful of some of those cash flow woes. Okay. So we've talked about the importance of cash flow, and again, in this current environment with this whole COVID-19, you see some of these businesses and you ask yourself, oh my goodness, how are they even running? It's, mostly because they probably have a surplus of cash sitting somewhere. Now, this may be cash on credit. Perhaps, perhaps they got a loan and had a, cash infusion to the business, or they just had been really good with managing their cash flow. And so they have cash in the bank where they can say, okay, well, we have a surplus of cash that's going to last this business 3 months, 6 months, regardless of whether we have any more sales. We can still, you know, keep some of our workforce. We can keep the lights on and some of the utilities, and we can still pay our vendors. And so they've made those intentional moves so that they can have better cash flow. And so it's very important, right? It's super important to have good cash flow. So let's see. I think I've gone through everything. So, okay, what did I do? Now, let's talk about that. So, what did I do outside of talking to my clients and say, hey, we need to find a better way? I went through all of my expenses and said, okay, what am I spending and do I really, really need it? And so this is kind of one of those conversations you have to have for yourself and say, do I really need this expense? Now, disclaimer, true, complete transparency. I love shiny toys. I am all about the next big shiny toy, whatever that may be. If it's a piece of technology or a cool new app or whatever I think I may need, the shiny toy and me, we are one. And so I had to kind of go through my profit and loss statement, which, if you don't do that each month, we probably need to talk. It's very difficult to go through cash flow if you don't even have anywhere to start. You got to have profit and loss statement. So we'll talk about that later. So I went through my profit and loss statement and I go, okay, what is it? What did I buy this month? What did I buy this month? And so our first thing I went through is all my subscriptions. I have a subscription for everything. So software, I need this app and I need that app. And so I went through the list and said, okay, but really, do I need all of these? And what I found is that I had several apps that did kind of the same thing. And so I said, okay, well, I can use this app because it does three things, and I can get rid of these two apps over here that just does one of those three things. And so I was able to kind of cut my cost down a little bit and say, okay, well, maybe that may not help me for this month because I'm already in the cash crunch, but for next month and future, I've cut down on some of these expenses. And so that means it's, the same amount of money coming in, unless I pick up a new client, but now there's less money going out. And so at the end of the month, there's going to be more money in my bank account. So that's one of the things that I did. I just went through my expenses and went, what did I buy? Made sure that I didn't, pull out, more money to pay myself for the business than I needed. The business is still very new. It's still growing. And so I don't need to pull out a lot of money out of the business in order to maintain, my household. And I'm the fortunate one. Some people are not that fortunate. They don't have the luxury of doing that. So that's a blessing in itself. And so, and then of course, I went back to those clients and said, okay, the ones that are not on auto pay, starting today, we are on auto pay, and I'm requiring a credit card because debit cards, if there's no money in the bank and you're having cash flow issues, I promise you, I'm going to be the last person to get paid. And so I don't want that. And so I said, credit card on file, you know, here's the paperwork to make sure you have that information. Can you sign it? Can you give it back to me as soon as possible? And then starting next month, this is how I will, take care of my fees for servicing your business. And it worked out. And so I'm hoping that next month it won't be so bad. I've cut some of those expenses. Everybody is on auto pay now. And I think that we are going to be good to go. Okay. What else did I do? I think that's it. If you guys have any questions about that, please make sure you um, go to the comments. I am hoping that I can do this every Wednesday, 6 p.m. Central Time. So if you enjoyed this, please let me know. Next week, I'm going to be talking about record keeping, retention, and the IRS. So we'll be discussing some of those things that you need to keep paperwork and things of that nature for the IRS, because the IRS has already stated that they are going to increase small business audits by 50% next year, even down to the small and pop shops. So that could be you. And we want to make sure that if that becomes you, if you're on the IRS's audit list, that you are well prepared. So the bottom line here is cash flow woes are real. They can be mitigated. Checking your expenses, making sure what you have purchased and that it's a need for the business, and then making sure that you are making it easy for your business to accept cash from your clients and your customers and whoever you get your cash from, whether it be a loan or something like that. So that's all I got. Thank you guys for tuning in, and I will see you guys next week, same time, same